And the GDP projection for financial year 2024-2025 was also slashed to 6.6% from the earlier 7.2%.
Real GDP growth for 2024-25, that is the current year, is now projected at 6.6%, with Q3 at 6.8% and Q4 at 7.2%. Real GDP growth for the first quarter of 25-26 is projected at 6.9% and the second quarter of 25-26 at 7.3%. The risks are evenly balanced.
All right, ED India Yogesh Sheetal now joins us live from Mumbai to talk more on this. Yogesh, the Reserve Bank of India has kept its key lending rate unchanged for the 11th consecutive time. Means the loan interest rates too are likely to remain unchanged?
Yeah, Abhishek, we can see it in that way also, but on the other hand, we can also see the way the CRR has been reduced by 50 basis points. That will be a boost for the economy as well, because we know the CRR is basically the money that is additional money, huge money that is kept with the RBI, and when the amount of money that is basically liability of commercial bank that is parked in the RBI. So if you see the burden is roughly around 1.6 lakh crore rupees are most likely to go in the banking system. That will be a relief for the banks and also for the investors at the same point in time. So we can say that there's a successful attempt to balance between the inflation and demand also at this point in time, because if you know, if you go through the conversation and through the press conference what Shaktikant Das had addressed a couple of hours back, he also highlighted how the economic stability as well as the liquidity and inflation, both things, multiple things in fact that have been tried to balance at this point of time, because we have also recently seen the election year have just passed down. So there are multiple factors that contributed in this decision. On the other end also, the RBI governor also said that in the time to come there are likelihood that some changes may take place, but at this point in time, the way the scenarios are happening, not only in India but also the global factors are also contributing to the decision. So yes, CRR, the way the CRR is reduced, that may give a boost to the market, and also share market positively responded to the decision. But many comments from the industrial body like CII, FICCI and all the private bodies, they are also the mixed response to this decision by the MPC. Back to you, Abhishek.
Yeah, Yogesh, Reserve Bank of India's MPC has reduced the cash reserve ratio to 4% from 4.5% to address the liquidity woes. I mean, tell us, make us understand, how will a CRR cut boost the economy? All right, Yogesh, if you can hear us, are you there with us? All right, we'll try to get in touch with Yogesh again, but yes, Reserve Bank of India's MPC has reduced the cash reserve ratio to 4% from 4.5% and kept its key lending rate unchanged for the 11th consecutive time.